Introducing the future of automotive innovation. Get ready to buckle up as we delve into the world of electric vehicles and autonomous technologies. With predictions of Tesla stock soaring to unprecedented heights of $3,000 by 2025. Traditional auto companies like GM and Ford are facing unprecedented challenges. Cathie Wood, renowned for her focus on high-growth technology firms, argues that Tesla's recent price reductions are not a threat, but rather a challenge for other automakers to keep up. As the auto industry evolves, investors need to keep an open mind and consider new opportunities. Join us as we explore the changing dynamics of the automotive industry and the potential for collaboration between legacy automakers and innovative companies like Tesla. Buckle up for a ride into the future of mobility. Welcome to Prima Invest, where we will give you information relating to all things investing. Let's get to the video. Enjoy. Wood predicts that Tesla stock could reach a staggering $3,000 by 2025, which is not only impressive on its own, but also underscores the potential challenges that traditional auto companies like GM and Ford may confront in the future as they compete with more innovative newcomers. This prediction sharply contrasts with more optimistic views from other analysts, like Morningstar's David Whiston, who values GM stock at $68. In a recent interview with Sandy Munro, Ford CEO Jim Farley acknowledged that the company has lagged in the EV market. Farley expressed his desire to follow in the footsteps of Henry Ford, who created an affordable car for all, and how Ford aims to adopt a similar strategy to navigate the growing demand for digital EV products in China. Jim Farley emphasized the significance of catering to different price points, not just high-end offerings, because they needed to achieve success in China, the world's largest market that also exports to countries like the Netherlands and Norway. Farley drew on the example of GM's market share plummeting from 60% to nearly nothing in the 1970s, while Toyota, previously with no market share, rose to the top by producing cars that met consumer demand. Farley believes that considering the entire market, rather than just a limited segment, is the perfect approach. Ford acknowledged that while they initially thought they could compete in the sedan and hatchback markets, their business in Europe faced challenges. They realized that their strength lies in the pickup truck industry, particularly with their Maverick model. They are focusing on areas where they have a deep understanding of customer preferences to ensure their innovations resonate with them. Jim Farley admitted that currently, Ford holds the second position, just behind Tesla, with a 6.2% share of the EV market. However, he also highlighted that Ford should take pride in its significant progress of 95% towards electrification. Despite Cathie's skepticism toward Farley and Ford, there has been unexpected development. Wood's ARK Invest Management has made a significant purchase over 150,000 shares of General Motors for its autonomous technology and robotics fund, or ARK-Q. This represents a notable change in Wood's previous perspective on traditional automakers, as she had been critical of their innovation capabilities. This decision was influenced by a meeting between Wood's team and General Motors CEO Mary Barra to discuss the company's electric vehicle plans. What do you think? Is Cathie's decision to invest in legacy automakers the right move? Let me know in the comments below. In a recent interview with Yahoo Finance, Wood disclosed that ARK was actively considering an investment in GM and had an open-minded approach towards it. This decision is noteworthy as it indicates that even an established stock picker, known for her focus on high-growth technology firms, acknowledges the potential of traditional automakers and the rapidly changing automotive industry. It also highlights GM's efforts in electric vehicles and autonomous technology, which are gaining attention and could yield positive results in the future. Wood's investment in GM is a positive sign for both the company and the broader auto industry. It shows that traditional automakers can adapt to changing dynamics and stay competitive in areas like electric vehicles and autonomous technologies. The move also highlights the potential for collaboration between legacy automakers and innovative companies like Tesla. It serves as a reminder that investing in the stock market involves being open to new opportunities and changing perspectives. As the auto industry evolves, investors need to keep an open mind and consider various factors when making investment decisions. Cathie Wood argues that Tesla's recent price reductions should be seen as a challenge for other automakers, rather than a threat to Tesla's brand. Wood attributes these price cuts to Tesla's cost leadership and battery technology and believes that other automakers must adopt similar strategies to remain competitive and avoid losses. She sees these price cuts as a strategic move that will likely bolster Tesla's market position, rather than a sign of weakness. As other automakers struggle to match Tesla's pricing, the company is expected to continue gaining market share and expanding its presence. Tesla can benefit from economies of scale in multiple ways, including by spreading fixed costs and negotiating better deals with suppliers. This can provide the company with a competitive edge in the market. Increased production volume allows Tesla to leverage prices to attract more customers, leading to a larger market share. This higher sales volume then enables Tesla to achieve even greater economies of scale, further solidifying its position in the market. Moreover, as Tesla continues to ramp up production, it can invest more in research and development to enhance its products and develop new strategies, amplifying its competitive advantage. This can create a significant barrier for other automakers to catch up with Tesla's market leadership. However, there are dissenting opinions among Wall Street professionals regarding Tesla's recent price cuts. Some express concern that these reductions may negatively impact the company's brand value and profit margins in the long term. Critics argue that Tesla's brand image, built on luxury and exclusivity, could be compromised by lower prices. They also highlight potential constraints on Tesla's ability to sustain price reductions due to rising costs in the supply chain or battery production. On the other hand, Tesla supports contend that the company's cost leadership, battery technology, and economies of scale will enable it to maintain its profit margins despite lowering prices. They believe that reduced prices will expand Tesla's market share and drive further innovation in the electric vehicle space. These supporters remain optimistic about Tesla's ability to navigate the challenges associated with price reductions and continue to thrive in the EV market. Indeed, legacy automakers have lagged in their embrace for new technologies, particularly electric vehicles, which is a factor contributing to Cathie's concern about their viability. Tesla, on the other hand, has emerged as a leader in EVs, with significant investments in EV technology and the development of affordable, high-quality electric cars that have gained consumer popularity. Many legacy automakers have been hesitant to invest in EVs and have instead focused on traditional gas-powered cars, leaving them at a disadvantage in the rapidly evolving automotive industry. The reluctance to adopt new technologies can be attributed to the complex and capital-intensive nature of the automotive industry. Legacy automakers have established relationships with suppliers and dealerships, and changing their business model to incorporate new technologies can be challenging and costly. Furthermore, concerns about the high cost of battery technology and the lack of charging infrastructure may also deter them from investing in EVs. This slow adoption of new technologies has put legacy automakers at a disadvantage in the face of Tesla's rapid advancements in EV space. Hey, if you enjoy this type of content, do give us a like and subscribe. With the growing demand for electric vehicles, legacy automakers are now increasing their investments in EV technology. Many have announced plans to launch new electric models and phase out gas-powered cars soon. While they may still have ground to cover in terms of innovation, legacy automakers are realizing the significance of embracing new technologies to remain competitive in the evolving marketplace. This is another crucial factor, according to Wood, that adds to the challenges faced by legacy automakers. In addition, new entrants in the industry like Tesla, Rivian, and Lucid Motors are dedicated to developing EVs and have attracted substantial investments. These companies are disrupting the traditional automotive industry and posing challenges for legacy automakers to adapt to the changing market landscape. Legacy automakers are not only facing competition from new players, but also encountering regulatory challenges. Stricter emissions regulations worldwide are making it harder for traditional car manufacturers to continue producing gas-powered vehicles. Additionally, regulators are advocating for increased investments in electric vehicles, further pressuring legacy automakers that have been slow to adapt to stay competitive in this changing landscape. To remain relevant in the automotive industry, legacy automakers must make significant investments in new technologies and adapt their business models to meet consumer and regulatory demands. This may involve substantial changes in the supply chain, manufacturing processes, and marketing strategies, but they are essential for their continued relevance in the market. In conclusion, the automotive industry is undergoing rapid changes with the rise of electric vehicles and autonomous technologies, as exemplified by Tesla's remarkable stock performance and Cathie Wood's bullish prediction. Traditional automakers face challenges keeping up with innovative newcomers like Tesla, but opportunities for collaboration between legacy automakers and disruptive companies are also emerging. Tesla's cost leadership, economies of scale, and battery technology have positioned it as a market leader, while other automakers strive to catch up. With the dynamic landscape and increasing competition, the automotive industry is poised for further innovation and transformation, and investors need to remain open to new opportunities. The future of mobility promises an exciting journey ahead. Thanks for watching. For more videos like this, click the link shown on screen. Remember to give us a like and subscribe to our channel, and as always, have a good one.